If you're collecting Social Security right now, or if you're getting close to that age, I need you to stop whatever you're doing and watch this video all the way through. Because in 2026, there are real, verified, government-confirmed changes to Social Security and Medicare that are already affecting your monthly check, and most seniors across America have absolutely no idea what they're entitled to, what they're missing, or what could quietly eat away at money that is rightfully theirs. I'm not talking about rumors. I'm not talking about speculation. I'm talking about official numbers straight from the Social Security Administration and the IRS dollars and cents changes that affect tens of millions of retirees starting this year. Some of these changes put more money in your pocket. Some of them take a chunk of your raise right back out without you even noticing. And one of them, a brand new tax break that most people over 65 are walking right past, could save you hundreds, possibly over $1,000, and it's sitting there waiting for you to claim it. So if you care about your retirement income, your Medicare costs, and making the most of what you've earned over a lifetime of hard work, stay with me, because we're going to go through everything clearly and honestly. No legal jargon, no spin, just the real story of what changed, what it means for your wallet, and exactly what you need to do about it. And before we get into it, if you're new here, welcome. This channel is built for people who want real, straight talk about retirement, Social Security, and making the most of your money in your golden years. Hit that subscribe button right now so you never miss an update like this one. It's free, it takes 2 seconds, and the information we share here could genuinely change your financial picture. Now let's get into it. Let's start with the news that touched every single person receiving Social Security this January. The official cost of living adjustment for 2026, known as the COLA, came in at 2.8%. The Social Security Administration confirmed this back in October of 2025, and it took effect with January 2026 payments. For the average retired worker, that translates to about $56 more per month. Your average check moved from roughly $2,015 a month up to about $2,071. If you're part of a married couple where both of you receive Social Security, the combined bump is around $88 per month. Over the full year, we're talking over $1,000 in additional income hitting your household. That matters. That's real money on a fixed income. Now, a 2.8% adjustment is slightly higher than the 2.5% COLA from 2025, and it follows those much larger adjustments from a couple of years back when inflation was running hot. The 8.7% COLA in 2023 was the biggest in about 4 decades, and since then, the adjustments have been coming back down toward more normal levels as inflation cools. So 2.8% is modest but meaningful, and it's automatic if you were already receiving Social Security. This increase showed up in your January check without you having to do a single thing. But here's where things get complicated, and this is the part the headlines don't always spell out clearly enough. That $56 monthly raise did not all make it into your pocket. Not by a long shot for many people. Because right alongside that COLA increase, Medicare Part B premiums went up in 2026 as well, and they went up significantly. The standard monthly Part B premium jumped from $185 all the way up to $202.90. That's an increase of $17.90 per month. And for the vast majority of Medicare beneficiaries, that premium is deducted automatically right from your Social Security check. So before you ever see your COLA raise, Medicare already took back nearly $18 of it. That means the real net increase most people are seeing is closer to $38 per month, not $56. After more than a third of your raise went to pay for a higher Medicare premium before you ever touched it. Think about that for a moment. You got a raise. The headline said $56 more a month, but quietly, before that money ever hit your account, nearly half of it was already spoken for. That's the reality of retirement math in 2026, and understanding it matters because it changes how you budget, how you plan, and how you think about your financial security going forward. Now let's talk about something even more important. A tax break that became law in July of 2025 and that millions of seniors are either not aware of or not fully taking advantage of. When the One Big Beautiful Bill Act was signed into law on the 4th of July last year, it included a new deduction specifically for seniors that is genuinely significant. Here's how it works. If you are 65 years old or older, you are now eligible to claim an additional $6,000 deduction on your federal taxes. If you are married, filing jointly, and both spouses are 65 or older, that number doubles to $12,000. And here's the part that makes this especially useful. This deduction applies whether you itemize your taxes or whether you take the standard deduction. You do not have to choose between them. The $6,000 senior deduction stacks right on top. The IRS confirmed this applies to tax years 2025 through 2028, so we are right in the middle of that window right now. To qualify, you need to be 65 by December 31st of the tax year, provide your Social Security number, and be a U.S. citizen or resident. The deduction does phase out for higher earners. It begins to reduce for single filers with income over $75,000 and phases out completely at $175,000. For married couples filing jointly, it begins phasing out at $150,000 in income. But for most middle-income retirees, and that's the majority of the people watching this channel, this deduction is available and meaningful. What does it actually save you? Well, that depends on your tax bracket. If you're in the 12% bracket, a $6,000 deduction reduces your tax bill by about $720. If you're in the 22% bracket, you're looking at savings of around $1,320. That's real money. The Council of Economic Advisors estimated that about 33.9 million seniors may qualify and could see an average increase in after-tax income of around $670. But here's the critical thing you need to hear. This deduction is not automatic. Nobody sends you this money. You have to claim it when you file your taxes. It shows up on Schedule 1A of your federal return, in Part 5, the section labeled Enhanced Deduction for Seniors. If your tax preparer or your software doesn't flag this for you, you could walk right past it and leave hundreds of dollars on the table. So make sure whoever handles your taxes knows about this and is applying it correctly. Now, you may have heard over the years that there has been a long-running debate about how the annual COLA is actually calculated. And that debate is getting louder right now in 2026. Here's the issue. The Social Security Administration calculates the annual cost of living adjustment using something called the CPIW, which stands for the Consumer Price Index for Urban Wage Earners and Clerical Workers. The problem is that this index tracks the spending habits of working-age city workers, what they spend on gasoline, on electronics, on work commutes. It does not reflect how most seniors actually spend their money. Seniors spend proportionally much more on healthcare, on prescription drugs, on housing, and on utilities categories that consistently rise in price faster than almost everything else in the economy. The Senior Citizens League, which has been tracking this issue for years, found in their 2026 report that the average Social Security payment has lost approximately 13.7% of its buying power since 2010. Think about what that means. Even with COLA adjustments every single year, the real purchasing power of your benefit has been quietly eroding for over a decade. Your check goes up by a percentage, but the things you actually need to buy your doctor visits, your prescriptions, your groceries, have been going up faster. There is growing bipartisan discussion in Washington right now about potentially switching to a different index called the CPIE, which stands for the Consumer Price Index for the Elderly. This index specifically tracks the spending patterns of Americans 62 and older, and it would more accurately reflect the real cost of living for retirees. Some members of Congress have proposed legislation to make this switch. Nothing has been passed into law at this point, but the conversation is real, it's gaining momentum, and it's something you should be watching closely, because if it passes, it changes the long-term trajectory of your benefit, potentially adding hundreds of additional dollars per year over time as the more accurate formula compounds year after year. While we're talking about things that directly affect your check, let's make sure you understand a few other important numbers that changed in 2026 that a lot of people overlook. If you are under your full retirement age and you're still working while collecting Social Security, there are earnings limits you need to know. In 2026, if you haven't yet reached your full retirement age, you can earn up to $24,480 without any reduction in your benefits. Above that number, the SSA deducts $1 from your benefits for every $2 you earn over the limit. Now, those reductions are not permanent once you reach full retirement age. Any withheld benefits are added back into your future payments. But in the short term, hitting that earnings limit can feel like a shock if you weren't expecting it. Speaking of full retirement age, 2026 marks a significant milestone. For anyone born in 1960 or later, the full retirement age has now permanently settled at 67. This was a gradual increase that began back in 1983 and has been phasing in over the decades. It's now complete. If you were born in 1959, your full retirement age is 66 and 10 months. But 1960 and beyond, it's 67. This matters enormously for how you plan your claiming strategy. You can still claim as early as 62, but your benefit is permanently reduced. And if you delay claiming past 67, your benefit grows by 8% for every additional year you wait, all the way up to age 70. That's a guaranteed 8% annual return on delaying something almost no investment can match with that level of certainty. Now let's take a moment to talk about something that cuts across all of these changes. Something that affects every senior, regardless of their income level or their benefit amount. And that's the issue of scams targeting retirees in 2026. This is not a small problem. This is a massive, growing crisis. The Federal Trade Commission has reported that Americans 60 and older lose more money to fraud every year than any other age group. And in 2026, with major news stories circulating about Social Security changes, Medicare updates, and new tax laws, scammers are specifically crafting pitches designed to exploit the confusion. Here is what is happening right now. Scammers are calling seniors and telling them they need to verify their information or update their records to receive their new 2026 benefit increases. They're sending emails that look like they come from the Social Security Administration or Medicare, complete with official-looking logos and government-sounding language. They're building fake websites designed to steal your personal information. And in 2026, artificial intelligence has made these scams even harder to detect. Scammers now use AI to mimic the voices of government officials, and they use real personal information purchased from data breaches to make their calls sound credible. They may already know your name. They may know your address. They may even know part of your Social Security number. That does not mean they are legitimate. Here is what you need to burn into your memory. The Social Security Administration will never call you out of the blue demanding that you verify information or take immediate action. Medicare will never call you asking for your credit card number or your bank account details. The IRS will never call threatening immediate arrest or demanding payment by gift card or wire transfer. Legitimate government agencies communicate primarily by mail for important matters. If you get a call like this, hang up. Then call the real agency directly using the number from their official government website, not a number the caller gives you, not a number from an email. Go to SSA.gov for Social Security, Medicare.gov for Medicare, and IRS.gov for tax matters. Those are the only numbers you should trust. Let's bring this all together with a clear, practical list of exactly what you should do. Specific steps that could put real money back in your pocket and protect the money you already have. First, log into your My Social Security account at ssa.gov right now if you haven't done it recently. Look at your benefit statement, verify the COLA increase hit correctly, and check for any messages or pending actions on your account. This is also where you'll be notified of any changes affecting your specific benefits. If you don't have an online account, set one up. It's free and it's the best way to keep track of everything in one place. Second, if you're filing your federal taxes and you are 65 or older, make absolutely sure your tax preparer or your tax software is applying the new $6,000 senior deduction. Ask about it specifically. It's on Schedule 1A. If you already filed and didn't claim it, look into filing an amended return, especially if the savings are significant for your bracket. Third, call 1-800-MEDICARE and ask how the 2026 Part B premium increase specifically affects your monthly payment and whether there are any supplemental options, like a Medigap plan, that could reduce your out-of-pocket healthcare exposure. The annual Medicare open enrollment period matters enormously for this, and comparing your options every year is worth the time. Fourth, if you are still weighing when to claim Social Security and you haven't started yet, please talk to a financial advisor or a free SHIP counselor. That stands for State Health Insurance Assistance Program before you make that decision. These counselors are available in every single state. They are completely free, they are not trying to sell you anything, and they can help you run the numbers on whether claiming now at 65, 67, or even waiting until 70 makes the most sense for your personal situation. You can find your local SHIP counselor at shiphelp.org. Fifth, set up account alerts with your bank and your financial institutions right now. Ask them specifically what elder fraud protection protocols they have in place. A sudden large withdrawal, an unfamiliar wire transfer, a new name added to your account. These are red flags, and your bank should be flagging them. If yours isn't, that's a conversation worth having. Here's the bigger picture worth sitting with for a moment. The Social Security system has been a promise to American workers since 1935. You paid into it your entire working life. Every paycheck, every year, money came out before you ever saw it, with the understanding that when the time came, the system would be there for you. That promise matters. And right now, in 2026, there are real forces pulling in different directions on that promise. There are benefit increases, but there are also rising premiums eating into them. There are new tax breaks, but you have to know to claim them. There are real conversations in Washington about improving the COLA formula, but nothing has passed yet. The Social Security Trust Fund continues to face long-term funding questions, with current projections suggesting potential shortfalls in the 2030s if Congress doesn't act. All of that means that staying informed isn't optional anymore. It's one of the most important financial acts you can take in retirement. Knowing the numbers, understanding how the system works, and taking action. That's what separates the seniors who are getting everything they're entitled to from the ones who aren't. And the people who watch this channel are the ones who care enough to stay in the know. If this video helped you understand something real about your Social Security and retirement benefits in 2026, I want to hear from you in the comments below. Tell me, did you know about the new $6,000 senior tax deduction? Have you seen that Medicare premium increase showing up on your check? Drop a comment and let me know what you're experiencing, because your story might be exactly what another senior out there needs to hear. This community looks out for each other, and that starts right here in the comments section. And if you know someone, a neighbor, a parent, a friend from church, a sibling, who is on Social Security and might not know about these changes, please share this video with them right now. It takes 10 seconds to send a link, but the information in it could be worth hundreds of dollars to someone you care about. That's the kind of sharing that actually makes a difference in people's lives. I'm Linda, and this is Retires with Linda. Hit that subscribe button if you haven't already, turn on the bell so you get notified every time we post, and I'll see you in the next video. Take care of yourselves out there.